In this video, we'll be taking a look at a few chart analyses to get prepared for the week ahead. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. If you're interested in learning to trade Forex like a professional, check out our complete Forex trading course on Udemy. I have the link attached in the description below as well. Without further ado, we'll be starting with the gold chart on the 1 hour time frame as usual. So we all know gold has been a bullish trend, and last week we talked about the possibility of price taking out this area of resistance, and we did come close to the area of resistance. We had a reversal which gave rise to this consolidation over here, followed by this bullish breakout to the upside. So I'm long on this trade. I got in around this price levels, currently holding some of my positions, took out some profits when we got to these highs, right? So if you're not in, I'm going to briefly take a look at what to expect from the market this week and what to watch out for before going long or short. Now, I had some very interesting discussions with my friend yesterday. He seems to be bearish with the hope that price is likely going to go down. But I think I'm still bullish on this chart. So I'm just going to review both case scenarios to see how we can take advantage of this market as the price action evolves. So first of all, we're going to talk about the bullish case scenario. So bullish case scenario simply means price is likely going to continue going higher. And what are we going to watch out for price to go higher, right? So as usual, I do wait for consolidation, as you know by now if you've been following me for a while, right? So I'm going to wait for consolidation around this area of value followed by a bullish breakout. If this happens, then your entry would be at the break of that consolidation. Stop loss is going to be underneath the consolidation, and you trail your positions as you go higher because we're currently in price discovery, so there's no telling how high price is going to get. So this is just one case scenario for a bullish case scenario, right? So another case scenario will be waiting for some sort of reversal, right? Hefty reversal into this area of value once more. Then we look for opportunities for buys in order to continue the trend. So this is another scenario that's very, very likely, right? Because we have a very good area of value over here right now. So if this happens, your entry is going to be after the bounce, right? After the breakout of the consolidation, evolving from the bounce. Stop loss is going to be underneath that bounce. First take profit target is going to be around these highs. Then you trail the rest of the positions as we go higher. So this is another possible route we could take in order to continue this bullish trend we have on gold. So if this two case plays out, then I want to be long. You want to pick an entry and get into those positions, right? Now for a bearish case scenario, there's only one thing or only one reason why I would want to go short, right? And that will be taking these lows, right? Taking these lows on this trend line and watching to see when price breaks this trend line. So I'm not just going to assume we're going to go down and you're going to jump to a sell position over here and all that. So for you to go short, you want to see price slowly coming to this trend line, consolidating a little and breaking out. If this happens, then you can consider going short. So if you go short, right, after the break of this trend line, so wherever that happens, your first take profit target wants to be around this area of value because there's a good chance we bounce off of this area of value going higher, right? Which is my second case scenario for the bullish case study, right? So that's why your first take profit target is going to be over here. Your entry is going to be here. Stop loss is going to be over the consolidation list of the breakout, of course. And then you watch to see what the market does. If we do get another consolidation on top of these price levels, right, followed by a bearish breakout to the downside. So instead of giving us a bearish breakout to the upside, we get a bearish breakout to the downside. Then you can continue, or you can think about continuing your bearish case studies, right? Bearish trade opportunities by going short after the breakout here and setting your stop loss above the consolidation list of the breakout. Then you can trail your position as we go lower. So this is the only scenario where I would consider going short, but because I'm mega bullish right now on gold, I wouldn't be trying this. So I wouldn't be going short even if we take out this trend line. So what I'll do is I'm going to watch to see what happens. So price breaks this trend line, for example. I'll wait for price to get into this price level, consolidate, and see what happens next. So do we go up or do we go down? So if we go down, then I'm going to be more convinced that we're going lower. Then that's going to prompt me, or that's going to require me to go short. But beside this, I'm just going to wait for that bounce to the consolidation to be completed wait for a bullish breakout to the upside. If it happens, then go long in continuation of the current trend, right? Considering the fact that we just broke out from this long-term consolidation which lasted for more than 4 months, I think, right? So this is how I'm going to approach gold right now. I wouldn't be going short because there's no reason to go short besides waiting for price to take out this trend line, consolidating around this area of value, and giving us another bearish breakout to the downside. Then I'm going to consider going short on gold. Besides that, I'm going to stay bullish, wait to see if price comes into this level, consolidate, gives us a bullish breakout. I'm going to add more to my positions, but for now my stop loss has been adjusted to my entry, so I'm safe on this trade, and I'm going to watch out to see what the market does, and that accordingly based on everything I just explained in this video. If you disagree with me, as usual, please leave your thoughts in the comment section down below. If you agree with me, also leave your thoughts in the comment section down below. Moving on, we're talking about crude oil. So crude oil, briefly, we talked about the possibility of price coming into this area of value. So this is the daily time frame, right? So daily time frame on crude oil, as you can see, we had this sharp decline with price creating lower highs, right? So lower highs, and we did attempt to break these highs over here, but it turns out to be a fake out. But that's only because we do have a very good area of resistance over here, right? So this is an area of resistance, which is the reason I think we had this reversal to the downside. So I think the next time we attempt to break out, so let's say price coming to this area of value, we may consolidate and eventually break out, right? So this is one case study to go long on crude oil, and I'm going to show you other case scenario to go long or go short on a lower time frame. So going on to the lower time frame, let's start from the 2 hours time frame, for example. So 2 hours time frame chart looks amazing, because if you take this trend line like this, so if you take the price across these highs, you would notice we just had our first major candle close above this trailing lower highs, right? And if you clone that, and this gives you some sort of descending channel, right? So this is a descending channel, price creating lower highs, lower lows, all the way back to this area of value. So this area of value was what we discussed on the daily time frame just now, where we've had this bounce. So right now we seem to have broken out from this downtrend, right? Because you can see price starting to create a higher low, so a higher high. So this high currently higher than the previous one, right? Now I think it is logical to expect price to keep going up, right? At least something like this. So do something like this, right, till we get back to this area of value, then see if we do go up or go down, right? So ideally it is logical to expect, you know, to go in. So when the market opens, I'm going to try and go in immediately when the market opens, right? But I'm going to see what happens with the next 1 or 2 candles first. Going in, if I have enough time to go in, I'm going to go in here. My stop loss is going to be underneath this area of value, which is a decent, I think 200 300 pips stop loss, I think. So the 200 pips stop loss approximately, and my take profit target is going to be around this highs, this area of value, and this would be approximately 600 pips. So that's a risk to reward ratio of 1 to 3. So my take profit target is 3 times the area of my stop loss, right? So this is a decent trade opportunity in my opinion, and if you have good risk management, you can obviously jump into this trade when the market opens, your stop loss around these lows, first take profit target around these highs, right? So this I'm going to go bullish on crude oil. So if you're too scared to go long at these current price levels, which seems like a decent area to go long in my opinion, you can also wait for price to grind upwards. If it does grind upwards, then wait for a consolidation around this area of value, and then wait for that bullish breakout. So if this happens, then you want to go long on the breakout. Entry is going to be after the breakout, of course. Stop loss is going to be underneath the consolidation leads to the breakout. Take profit target could be as high as this price level for the first one. Second one can be here, like this. And third one can be at this major area of value we saw on the daily time frame. So going back to the 4 hours time frame, for example, yeah, so you can see, so this is how I'm going to trade crude oil right now. So I'm going to go in when the market opens because I have a good risk management, and I think 200 pips stop loss for me is not a big deal, considering the fact that my take profit target is around 600 pips potential profits, right? Potential, yeah, take profit target. So this is how I'm going to trade crude oil on a bullish case scenario. So for a bearish case scenario, right now, the only reason why I want to be bearish, or you want to be bearish, is if, excuse me, I'm going to get rid of these lines. So the only reason to get bearish is if we do, let's say, market opens and we get a red candle reversal to the downside, and we get more consolidation around these price levels followed by a bearish breakout, then this would be your case scenario to go bearish, right? So your entry can be at the breakout from the consolidation. Your entry, your stop loss will be above the consolidation list of the breakout, and your take profit target is going to be around these lows over here, right? So this is how you're going to trade crude oil if we do get a reversal when the market opens and we get a consolidation on its area value, leading to a bearish breakout for a bearish trade opportunity. So this is how I'm going to trade crude oil. If you disagree with me, again, please leave your thoughts in the comment section down below, or if you agree with me, tell me why you agree and why you strongly support my thesis as to how the crude oil chart is going to play out over the next coming days or weeks, right? Moving on, we're talking about US30. So US30, very, very interesting chart. We're still bullish, of course. So bullish trend, of course, obviously bullish trend. But for the short term, I think there's a good chance we see some really nasty price declines all the way down to these price levels, right? So price decline to this area of value before we bounce up again or go down. So this is one case scenario. There's also a scenario where we get a little bit of a reversal back to these price levels. For example, reverse to the upside, consolidate a little, and then breakouts going higher, right? So however happens, or whichever happens, we want to be ready to make sure we're able to take advantage of the price action that evolves from the current market situation for us to make some decent profits. So first case scenario, I'm going to discuss my bullish case scenario, right? Bullish case scenario, waiting for price to decline a little, reverse, and consolidating around this area of value, followed by a bullish breakout to the upside. If this happens, I will be going long after the breakouts. Entry is going to be underneath the consolidation list of the breakout while I trail my positions as we go higher, because that will mean price being in price discovery, right? So this I'm going to go long on US30. My first bullish case scenario for long position on US30. Second bullish case scenario will be watching out for something like this. So give me a minute. So if you take a closer look, you will notice that this has turned into a significant area of value, right? You can see rejection here, bounce here, rejection here, consolidation here before they move to the upside. So this is a logical price level to be classified as a solid area of value. So my second bullish case scenario will be waiting for price to slowly come down into this area of value, consolidate a little, and then give us a bullish move to the upside. If this happens, my entry is going to be after the bounce, so the breakout after the consolidation following the bounce. Then my stop loss is going to be underneath that consolidation or underneath the bounce. First take profit target is going to be around these highs, while I trade the rest of my positions as we go higher. So this is my second bullish case scenario for US30, right? So alternatively, even if we do not get stopped by this area of value, so let's say for example we come all the way down to these price levels, we consolidate, and then we break out, then my second target will be waiting for this area of value for me to go long, like we did over here, right? You can see each time we came to this area of value, massive move to the upside. We came down here, massive move to the upside. So there's a good chance if we come down here again, there's going to be a massive move to the upside, or this time we're going to take out those lows, right? So this is how I'm going to go bullish on US30. So for a bearish case scenario, I think you already know by now, if you have a very good risk management, you could go short right now this current price level with the hope that we come all the way down to these lows. But I don't do that. There's no way I'm going short at this current price level, because there's a good chance this may be a small pullback, which will lead to a reversal and a consolidation for a bullish breakout. So that's the reason why I won't be jumping to a short position now, even though it looks enticing and interesting. So what I would have done, right, for those who maybe probably in already or we're hoping to get in, so you probably could have entered around these price levels here. with your stop loss around these highs. So this gives you an extremely tight stop loss. So just in case we do breakout, then you lose a little amount of money, right? Compared to entry around price level. Because entering right now would mean risking around 250 pips stop loss, right? Sorry, this will be around 600 pips stop loss, right? So you don't want to do that, right? So 200 pips will be over here. Yeah, 200 pips will be over here like this. 600 pips, yeah. So if you jump into the trade right now, you'll be risking around 600 pips stop loss, which doesn't sound realistic or nice to me, right? So even with my risk management, I wouldn't try that because there's just a good chance we reverse and continue going higher. So if you were going to go into this trade, your best bet would have been entry around these price levels, right? Entry around this price level immediately after the rejection, which will put your stop loss at approximately 200 pips. Yes, that's something you can risk, and trail your positions as we go lower, right? But for now, this price has moved far away from that position for you to, want to jump into a sell position right now. So for me, I'm simply going to wait for price to get into this area of value, consolidate, and give me a breakout, signifying that we are going to continue the bearish move to the downside. So entry is going to be after the breakout, stop loss above the consolidation list of the breakout, and take profit target is going to be around these lows. So this is how I am going to trade a bearish case scenario for US30. Not that I'll be doing this, I won't be doing this, but for those who are bearish, they can obviously try this out, right? So another situation will be waiting for a sharp decline, then consolidation along the way, like a bearish continuation pattern followed by a bearish breakout, right? So if this happens, then your entry should be placed after the breakout, stop loss should be placed above the consolidation list of the breakout, then your first take profit target can be inside this area of value. So this is another situation to watch out for if you intend to go short on US30. So this consolidation over here would help you get a tighter risk to reward ratio, right? A tighter stop loss with a better risk to reward ratio. Yes, that's it. So this is my brief bullish and bearish case scenario for US30. Moving on, lastly, we're talking about GBP-USD. So I barely talk about currency pairs lately because the charts have just been crazy. So there's no really clear direction as to how or where they're going to head. So you only find out in retrospect that, oh, your analysis was right, but picking an entry could just be so nasty because currency pairs moves irregularly, right? So right now, the reason I'm reviewing GBUS on the daily time frame, will eventually go down to the lower time frame, is because the chart looks a little bit clean. So we talked about this bearish breakout a while ago with a reversal retest following a bearish move to the downside. We talked about this, and I hope some of you did take advantage of this. I didn't trade GBUSD because I've not been trading currency pair for quite some time, and I believe you all know that. So right now, I think it is logical to jump into a trade when the market opens if you have a good risk management with your stop loss above these highs, because we just reversed from this area of value, aiming or looking to go lower. Take profit target is going to be around these lows, which is around, yeah, these lows we have over here. And if you take a major price movement, this will give you approximately 150 pips stop loss, 150 pips stop loss with a take profit target of approximately 300 pips, right? So 350 pips. So this is a risk to reward ratio of 1 to 2, which is a little bit decent in my opinion, except maybe we come all the way down to these lows, which is not guaranteed at all. So this will be 600 pips approximately. So that'll be a risk to reward ratio of 1 to 6, I think, or 1 to 4 the case may be. So going down to the lower time frame, for 4 hours time frame, for example, if you take a closer look, you will see that we have a clear area of value here. We had a breakout to the downside, and now we've retested this area of value looking to go lower. So this is the reason why I think going short at this current price level seems like a decent trade opportunity in my opinion. And if you go short around the current price levels, stop loss is going to be around this high, as I said earlier. Take profit target is going to be around this low. First one and the second one can be all the way down to these lows. Alternatively, if you don't want to risk it, you could wait to see if we do get some sort of price reversal to the upside, followed by consolidation and move to the downside. So you could pick a trade position around this area. So this would give you a tighter reward ratio of approximately, let's see, approximately, yeah, 80 pips. So that may be a decent opportunity for some persons depending on your trading balance and your risk tolerance, right? So for me, this I'm going to trade GBP-USD right now. I won't be going long for any reason, just because this looks bearish. So the trend looks bearish, obviously, as you can see. Current trend. So this current trend, lower highs, lower lows, just like a step, right? So there's a good chance we do get more bearish decline to the downside, like this, like this, like this. Then before maybe we find the bottom, I'll start to go up. But for now, I'm going to stay bearish. No need to go long. My bearish case scenario will be entering at the current price, entering at the current price levels and adjusting your stop loss all the way up to this highest. And then your first take profit target is going to be around these lows. Second one will be around this low. So this I'm going to trade GBP-USD. So that's it for this week's analysis. If you love the content, please like, subscribe, leave your thoughts in the comment section down below. And if you're interested in learning to trade Forex like a professional, check out our complete Forex trading course on Udemy. It's going to help you a lot. Taught everything about price action in there, and trust me, it's just all you need right now if you're interested in learning to become a professional, profitable trader. So that's it for me, guys. See you next week.